seeing people take time for themselves, whether it's, I'm not a health professional, but look after the health and look after the finances. I think we are so busy running so hard all the time, all of us,
Mhm.
that we're putting ourselves last, and putting yourself first means paying yourself first, rewarding yourself as well, and really having balance in your life. Because so many people just work like crazy, they retire, and then 2 months later they pass out.
Yeah.
More balance, more harmony, and making yourself a priority in all areas.
Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to Sterling Insights, Stand Out and Supercharge Your Assets. I'm your host, Roger Silk. Today's guest is Eric Watchorn. Eric is the founder of Watchorn Risk and Wealth Management. He is renowned for his expertise in achieving absolute returns on the NASDAQ, New York Stock Exchange, and the London Stock Exchange. Eric skillfully integrates a deep understanding of human nature and risk management to enhance wealth management strategies. He offers practical investment and insurance advisory services, guiding his clients towards financial success. And Eric, I don't know if you want to add to that or modify anything there. I just want to give you a chance because that was the bio that I think we
that came across. Yeah.
From,
No, that's great. Thank you, that Cat, because obviously you're aware of the book we also wrote, right? So yeah, that would be the only thing to weave into it. But yeah, that was perfect. Thank you, Roger.
Can you kind of share your journey of where you came from and how you got to be where you are in the financial industry?
Yeah, thank you, Roger, for letting me do that. It was kind of a sort of a different kind of road to get to financial services and helping regular folks, business owners and families. I basically coming out of university, I had a couple of different jobs that were non-financial related. I had actually been trading futures on my own and was kind of interested in the financial markets. I actually had to update charts manually. They weren't real time at the time, and I did that once a week and really enjoyed the process. I guess after university graduation and a few years of working other jobs, I came across an opportunity to open up a trading floor in Victoria, BC, Canada. And I took it, but it meant getting all kinds of qualifications, both in Canada and the United States. So I ended up doing that, ended up opening up an office here, running it for about 7 years. We actually had over 7 years of no losses at all on any of the exchanges any given day. And we really did a good job, and then transformed the business into an international operation. Did work in China and in Vietnam. And long story short, I exited that business back in 2011, and then ended up helping clients with money management, with investments, and saw a need for them to be introduced to more ideas on insurance because they were scratching their heads. I don't think, and my co-author Michael would agree with that the insurance services in the financial spectrum is probably not sold always in the best way, or maybe even respected by the audience in the best way. For example, in Europe, people will put on a suit to see their banker and their investment manager, but they also put on a suit to see their insurance advisor. Where in North America, that seems a little bit less so, it seems to us. So I saw a great opportunity to highlight some of the features that insurance products can do as tools if they're needed. And, there's no silver bullets or anything. And so basically, kind of decided to roll my experiences into this path and become an investment advisor and insurance advisor on the independent side. And that's how I operate in Canada. That's roughly how I came here.
When were you trading futures?
That was back in the late 80s.
Late 80s. And you were just trading them for your own account?
Yes, I was trading anything from pork bellies to lumber.
Did you have any particular approach that you used? Or were
I
you?
had done some reading on the turtle methods, and basically very slow trend following approach, buy low, sell high, obviously. I wasn't shorting too much at the time. So,
Did it work? Did you make money?
yes, a little bit.
And is that still part of what you guys are doing is trading?
No, not really. I have a chart, obviously, in the background here. I run my own accounts in the morning for the first couple of hours, still futures, some options, other derivatives as well. But what it really does for me, for my clients and their portfolio, because I'm so plugged into the markets, it does help me have quite a good sense of what the markets are doing on a day-to-day basis. And I believe that helps me with my clients' portfolios indirectly because I don't trade them in the same manner.
So your clients, are they in Canada, US, both? How does that work?
Mostly in Canada, but I have some international clients as well. Non-US.
Oh, right. Okay. So
it's a different licensing mechanism. Yeah.
What would a typical client for you look like?
Good question. In general, there are usually people more on the successful side of things, whether they're in business or professionals or even athletes. And they usually they want to keep their lifestyle going. They realize that maybe their performance years are not very long in terms of the general lifespan, and they want to make sure that that money grows, the asset performs well. But we all know that markets are cyclical. Things go up, can come down. And so what we really work on is protecting that growth and really having them enable compounding of interest, not make 100% and then lose 110% or whatever have you, really have it grow and be conservative so they can sleep at night. And that's really important because nobody wakes up or gets bored saying, I want to hold Microsoft or I want to hold Amazon. I can't wait for the dividends, like we just want the end result. And that's what we try to deliver.
You've been doing this for how long, what you're doing now?
We opened the trading floor in 2000. So overall, 24 years.
Okay. And they tend to be high net worth. What's the kind of number range that you're looking at?
Usually $500,000 to $1 million, bottom and then up.
But
we work with people that are up and coming too, of course. Yeah.
And then you're investing their portfolios and you're doing financial planning for them as well?
Yes. So I work with a network and a team of people. So sometimes if they have an appetite for certain investment vehicles that I don't necessarily am licensed to carry or promote or engage in, then I will refer them to other associates that will gladly do that.
Eric, I'm interested in your book. You wrote a book, Financial Blind Spots, which has those, instead of the S's, I think it's got, if you have a copy there, you can hold it up.
Yeah, it's got the dollar signs there. Yeah.
I think that's pretty neat. Well, tell me a little bit about your thinking about how you came to write the book, what you think some of the main takeaways are, why someone might benefit from reading it.
Thank you. Yeah, we had quite a good positive feedback on the reviews and people saying, I wish I would have read this 20 years ago, So a lot of younger people are reading it and getting something out of it. In a nutshell, I had the idea to write a book. So did the co-author, Michael Baker. And we came together, we met during some industry functions. And long story short, we ended up working together for a while. And we saw together that there was a lot of sort of gray areas, or the financial industry maybe wasn't portraying things as level or as equal or balanced as it should. So we both came at the financial services industry from two different directions. Him from the CPA side, myself obviously from the trading floor in the markets side. And we thought we could add some perspective to the financial industry. And so we began the book with chapters on mindset and, your thinking and being aware of how you think. And then we got into other blind spots, which we think are very important, that go into preconceived notions about insurance, about investments, about rates of return, about taxation, because really, as you know, taxation is one of the biggest issues in everybody's growth of their financial path, right? It makes a massive difference. And having people on your team that can help you with that is so important.
I have met countless people who, if they had the money that they'd paid in taxes, could be completely done if they wanted to be.
Yeah.
So are there several major blind spots that you guys have identified and that you can tell people about?
Yeah. So obviously the book has got a number of things in it. One of the things that really woke me up in terms of the financial landscape was that the Dr. Fau, PhD also in the United States, he wrote a book on two economic powers and sequence of returns. And we really worked with his volume of work in the sense that we really appreciated where he was coming from. And he was saying basically, based on your current portfolio, and based on what the markets are doing, you could end up here, you could end up down below here, or anything in between, based on sequence of returns. And he was basically arguing in his work that why not add another economic power to your portfolio? And since we had, agreed that insurance was something that was somewhat neglected in the discussions with many people, because a lot of financial advisors or stockbrokers and investment advisors care very much about their assets under management. Mm-hmm. And they will focus on the things that they know and understand, which is fair. However, in that, we sometimes ignore other things that could be very good for a client, such as participating in life insurance. And if it's done properly, it can become that second economic power. The first economic power, of course, being buy low, sell high. You sell something worth more than when you initially bought it. That's the whole premise of any kind of investment, right? Even if you're going short, you're selling it higher than you're buying it lower.
Right.
But the second economic power being something that actuarial data is used by insurance companies to figure out, okay, is this person insurable? And based on that, you can actually get a policy, not only get a policy, participate in the insurance company's profits. And some of these companies have been around for 100 plus years, 120 years, never missed a dividend. I don't know of any hedge fund that ever missed a dividend. Many, I'm sure, have. These insurance companies are very, very well run. And now you've got another power in your portfolio that never goes backwards, that always has compounding. And it complements your investment portfolio so well. Like it really matches a lot of times for us, the S&P 500 performance. But we know if there's a negative 35% drop, like in 2008, 2009, we're not going to see that with the insurance company, because the insurance companies make money every single year, partially because they don't pay out all term policies that are on the books. And those are pure profit. And those profits go to the participating policyholders. So it becomes another sort of profit engine that we don't otherwise see in most portfolios.
Mm-hmm.
And that, in my opinion, is a major blind spot for the audience, for the consumer, but for many professionals too, excuse me.
So in the book, you use the metaphor of a financial house.
Yes.
And I guess it starts with the foundation. And so how do you think about that? What's the foundation? Say somebody comes to you and, hey, Eric, I've done pretty well, but I'm not really all that confident that I'm doing all the right things. How do you approach that? What do you do? What kind of foundation you look to put in for them?
Well, as you know, it's all very subjective too. So getting to know the client is key, understanding their motives, their concerns, because there may be things that even after a coffee meeting, without digging into it, we may not know. I mean, this person could have a health issue that could change the entire outlook quite a bit, or maybe has a partner that has a major health problem, or a daughter or a son, etc. So those heavy life elements have a huge factor. So it's hard sometimes to just say something like this from the hip. But in general, we found that a lot of people have too much of the same furniture in that house example. As a foundation, we want to make sure that their long-term view is looked after in terms of whether it's their retirement and spending for themselves, or maybe addressing capital gain taxes or parts of their portfolio that needs to be made more efficient and optimized so that the heirs don't deal with a lot of taxes. So things like that are usually one of the first things we look at. Naturally, depending on what their net worth is, sometimes there's a good reason to implement even living benefits in terms of insurance, because a lot of people think, and business owners especially, I'm doing well, everything is great, I can just keep going at this pace for another 100 years, but we can't, so are there things in place that can help me? Because even people that are making $500,000 a year, if they end up getting sick and they can't work for a year or two, it does change a lot of things.
Yeah, that makes a lot of sense. Is there something, Eric, that you've kind of learned, that you either the easy way or the hard way, that you kind of wish you knew when you started?
Yeah, actually, this whole insurance thing, to be honest with you, as you could tell, I've been in the markets for a long time, and I really love the markets and all the things it can do for people and countries, etc. The insurance thing, there's so much insecurity in our world. There's so much insecurity in terms of our health. The whole health picture in industry is under a microscope right now. People are not taught from school to really take care of their own bodies, and we're not taught to take care of our own finances enough. A lot of this stuff, you probably would agree, would be great to have in the schools and get the younger people learning this stuff right off the bat, right? I hope that our book can help with is that people become more aware of how they think about money, how money plays a role in their life, and how they can plan early in life when they're young and healthy. So one of the things is, there's time is not on your side when you're investing. So you want to get in as early as possible. It's the same thing with some insurance, some basic insurance that lasts forever and that'll make money forever, basically. One of the things I'd recommend to a lot of young families, to a lot of young people. And it's something I wish I would have done more for myself. We've done it for our daughter, and we do it for many of our clients' children to set them up. There's a book out, What Would the Rockefellers Do? And in it, it profiles that the entire Rockefeller family, we all know, of course, how wealthy they might be. Every time there's a new baby in the family, they buy a new whole life policy. So, those are the kind of things that, imagine everybody, if everybody had a permanent life insurance for $1 million, what would the landscape look like? In terms of people's well-being and families and how well they're prospering.
Right. So when you're talking about, if you're buying insurance for essentially a newborn, you're looking at something like 80 years, that's a long time to look into the future. Do you worry at all about who the issuer of the insurance policy is? Do you limit yourself to only the highest quality companies?
Very good question. Yeah, in Canada, they're really, like in the States, they're very well regulated and monitored, cash reserves and all that. We tend to deal with the top 5 carriers in Canada. The biggest names, basically, of Canada Life, Manulife, Sun Life, Equitable, Empire Life, BMO, sometimes RBC, being the biggest company in Canada, obviously. So yeah, we definitely make sure we go as solid as one possibly can. Now, could there ever be a failure? Theoretically, of course, like with any organization or company. But the history has been amazing.
Is life insurance, is all the risk retained by a single company, or do they, if you put a policy on somebody, are there multiple companies that are behind that in case one of them would run into difficulty?
Yeah, another really good question. Here in Canada, and I think it's the same in the United States, is that a lot of companies will do the underwriting themselves. So if you're applying for, say, $1 million policy, if you get approved, it would be the carrier that would carry that entire risk. Let's say it's Manulife. However, sometimes if you end up with a client that has a need for $5 or $10 million, and let's say they get approved, the insurance company on the background may decide, you know what, this person's 55 years old, they're healthy, yes, but we don't want 10 million on just this one individual. So they'll go to what they call the reinsurance market, and they'll go to other companies saying, hey, he's approved, he's fine for risk, but we just want to spread it. You guys want a piece of it. So maybe they'll end up with 3 companies at 3, and 3,
that makes sense. Yeah.
So you could do it yourself as well as them on the back end. In Canada, we have an organization called Assurance, which is basically insurance of the insurance companies. They all pay into it. It's a buffer. again, they haven't been utilized in Canada. There's been two instances, I believe, a couple of decades ago, whereby two of the companies had their thresholds go a little low. They didn't fail, but what ended up happening is two of the bigger companies ended up buying them out.
Right.
Yeah. So no failures in Canada.
Yeah. So obviously, it seems to me that a lot of your life has been focused on finance. And I think for most people, that's financial success is an element of success. But I was just kind of wondering more overall, how do you think about success to you as a person, as a businessman? What is success to you?
That's a great question. I've changed a lot in that area, actually. I used to be into this empire building mentality and bigger is better on all fronts. And I certainly have changed in the last 10 years. For me, success would be just peace of mind, having the ability to go for a little short trip or a longer trip if you want, maybe not work the full week. I'm not a huge believer in retirement per se, this hard line at age 65 or whatever it may be. A lot of people that are successful in general have a similar attitude. That's why you see Clint Eastwood still making movies, You enjoy what they do for the most part, perhaps. But for me, success wouldn't be to have this amazing retirement. It would be able to live the rest of my years in harmony between work and pleasure and wonderful experiences.
Great. Eric, is there anything that you want to share that we haven't talked about yet?
Yeah, guys, buy the book. Even though we are operating in Canada, it's got tremendous value to the United States audience as well. And, I don't think you'd regret it. We really, really believe it's been an awesome launch. It's been a great product and the feedback has been great. And we don't have to be in your universe. Read the book and just pursue it the best you can.
That's terrific. Eric, with all your success, what do you find is your biggest challenge?
Seeing people take time for themselves, whether it's, I'm not a health professional, but look after their health and look after their finances. I think we are so busy running so hard all the time, all of us, that we're putting ourselves last, and putting yourself first means paying yourself first, rewarding yourself as well, and really having balance in your life. Because so many people just work like crazy, they retire, and then 2 months later they pass out. Yeah. More balance, more harmony, and making yourself a priority in all areas.
Okay, great. Eric, where can our audience go to learn more about you?
Probably the best would be our website, which is www.oxley.wrwncorp.com. It stands for Watchorn Risk and Wealth Management Corp. So WRWNcorp.com. Okay. And your book again, Financial Blind Spots. And yeah, Insider Secrets to Discovering Financial Freedom. It's right here.
And where do people find that?
It's on Amazon as well.
Amazon.
It's in a hard copy, soft copy, and digital as well.
I really appreciate you joining us, Eric. Thank you very much. It's great talking to you.
You too. Thank you for having me, Roger.
Have an awesome day. Have a great rest of your day. Thanks. Bye.
Thank you for listening to another episode of Sterling Insights. Stand out and supercharge your assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.